It's one thing to invest $100, and the next step to invest $1,000. But when we start talking about bigger chunks of money, when we start talking about investing $10,000, there's a lot more planning, there's a lot more strategies that you could implement. And just to prove a point, I'm gonna walk into my bank, I'm going to withdraw $10,000 in cash in $100 bills, and then we're gonna talk about what are some real life strategies that we can invest this $10,000 to make the most money. So, you wanna find out what it is? Let's go check it out. So I'm leaving the bank and I've got $10,000 of cash in my hand. This is probably not the smartest thing to be walking around with this amount of money. I thought about recording some of this video now, but the other thing too, when you walk into a bank wearing a black hoodie and you're asking for $10,000 of cash in $100 bills, I will tell you this, they will look at you funny. Just keep that in mind if that happens to you. All right, so we're gonna head back to the house and we're gonna talk about what these strategies are and how we're gonna invest this $10,000. I'm actually gonna give you 7 strategies, 7 different strategies that you can invest this money depending on the type of investor you are, how much risk you are, or how much risk that you're okay with, and also where you're at in your life. So anyway, we're gonna head to the house, we're gonna find out what these strategies are. Let's go. So, made it home. I've got the $10,000 in check. Didn't get pulled over. It would have been awkward trying to explain to a police officer why I've got $10,000 cash sitting on in my car. But anyway, avoided that. Before we talk about these different strategies, I really just want to talk about, what does this look like getting $10,000? Many of you, that might be something hard to even comprehend, like getting $10,000 to be able to invest that into something. I know for me, it was several years. If you watch my How to Invest $1,000 video, to invest my first $1,000, like that was a big deal. You have to remember, I came from a background where I didn't have any money. My parents didn't have any money. Both my parents filed for bankruptcy, not once, but twice. So to get to a point where I could actually invest and invest $1,000, like that was a big deal. But to finally get to a point where I can invest $10,000, that's even a bigger deal. And it's so funny because oftentimes you can see like Bitcoin or Facebook stock or some other investment where like, oh, if I had $1 million, I would put all my money into that. Like that would be a no-brainer. And that's so easy to say when you don't have that money in hand. But when you actually have this money in hand, when you've got this $10,000 that you've worked your butt off to save, to get it to a point where you can actually invest it, you start just really thinking a lot, and you're not as aggressive as you think that you might be. Because if you put a lot of sweat and blood and tears into getting this money, you don't want to lose it over some stupid investment. Now, before you invest, I talk about this in some of my other videos, and I talk about how if you were to get $1,000 and you have debt, don't even start investing, pay off that debt. And then I talk about building up your cash savings or building up your freedom fund. And really, that doesn't change much here. Now, I'm not saying to take all this money and maybe pay off all your student loans or pay off a mortgage that has a very low interest rate. Like, I'm not saying that. So many people want to argue with me saying like, well, if my mortgage is 3% or 4% and I can go out and make 8% in the market, then why wouldn't I do that? And let me just say a few things. One, it's one thing to have debt, but if you don't have a deep understanding of why you are in debt or why you can't get out of debt, then you have no business investing. It's one thing to recognize that you have debt and you have a plan to paying that off versus having a ton of debt and having no accountability or not having a deep understanding of what got you into debt in the first place. So if you think you're gonna go out and make more money, but yet you haven't solved your debt problem, then you're never going to get out of debt. In regards to building your cash savings or your freedom fund, like we're all gonna have emergencies. You're gonna get a flat tire, you're gonna have to repair your refrigerator or your washer and dryer. Like those things are going to happen. That's called life. But it's not so much for the emergencies, it's for the freedom that the cash allows you to have. A personal example that I can share with you is the fact that my family and I moved to Nashville. We had an amazing house. I had my business there. So for us to move to Nashville, there was a lot of scary things involved with that. But we had a sizable freedom fund. Our cash savings gave us the security that we needed to be able to move, to build our house, to move our family, to move my businesses to where we didn't have to stress out and worry about it. And that's why it's so important that we address those two areas before we start talking about investing. All right, let's talk about these strategies to invest this $10,000. The first one is kind of a gimme. It's the stock market. I know. Surprise! It seems like every time I talk about the stock market or investing in the stock market, most people are just like, why are you talking about the stock market again? Stock market's all-time high, blah, 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 blah. Listen, investing in the stock market is still going to make you money. Now, is now the best time to invest in the stock market? I don't know, maybe, unless you've got a crystal ball, you can let me know. But we do know that over the long term, the stock market is one of the best places to invest your money. But saying I've got $10,000 and to invest that into the stock market doesn't really give you a lot of information on where to go. So I want to share some of the different options you have depending on how much control that you want to have investing into what stocks or what investments. So one of the safest options that you can do is an online platform either called Betterment or Wealthfront. Now both of these are called robo-advisors, and I don't know why they call them robo-advisors or they're robots, I don't know.
Benjamin, oh, come here, give me a hug. Oh, it's so good to see you.
But basically what they do is they choose the investments for you. Using Betterment as an example, when you log into Betterment and you open an account with Betterment, you decide what are your financial goals and what is your timeline. How long are you going to invest this money? And based on that information, they're going to choose the investments for you. In their case, they're using low-cost ETFs or exchange-traded funds. Now, ETFs are some of the best low-cost investments that you can buy, and you can buy these on your own. Or you can open an account with Betterment and let them choose them for you. Why I talk about Betterment a lot is because a lot of people get stuck in trying to decide what to invest their money into the stock market because there are so many different options. And with Betterment, it removes that wall, that obstacle, that excuse from not getting invested because you don't have to choose it. You just got to open the account, move the money in there, and you get started. A couple other cool things about them is that with their fees, they charge you not a lot. They're very inexpensive, especially compared to a lot of the big Wall Street firms that just want to take you for all you're worth. Another reason I like them is that they don't have a huge maximum amount to get started. Whereas some of the bigger investment firms, they may not work with you unless you have $1 million. With Betterment, you can start with as little as $25 a month to get started. So for those that don't have a lot of money and they're scared of choosing the right investments, you don't have to worry about that with Betterment. Robo-advisors like Wealthfront and Betterment are one of the safest options just because you're not going to make mistakes and choose something silly or sell something when you shouldn't sell. Now you're still invested in the stock market, so there is risk involved. Another option, if you want more control, is to buy your own mutual funds or your own ETFs. Now you can use online brokers like TD Ameritrade, E-Trade, Ally Financial. All of these are going to have very low cost transaction fees to buy mutual fund stocks or whatever it is that you might want. Typically what I recommend if you have $10,000 and you want to invest it and be diversified, I would put that into either 2 to 3 different mutual funds or ETFs. Now for me, since I'm a more aggressive investor, I'm going to choose something with more stocks. I really don't want any mutual funds or ETFs that have any bonds in it. But I also want to make sure that I don't have all my money tied up in the US stock market. If I am going to invest this into stocks, I want to make sure I have some exposure in the US markets as well as international. So I might put, say, 75% into a US stock fund and 25% into an international. That is no way a recommendation, so please don't take it as that. That is just a suggestion based off of what I would feel comfortable with. You heard that right. Another option that you have that is more risky and not probably a good choice if you're not familiar with investing in the stock market is buying individual stocks. Now, I shared in a previous video where I had a $110,000 gain in my Roth IRA, and I shared some of the stocks that I personally own. What I didn't share in that video is one of the first stocks that I bought. It wasn't an IPO because I couldn't get in on the IPO, but I bought it right after it hit the IPO. And this IPO or this stock is Under Armour. Now, kind of the cool story about this is that I bought this stock whenever I was deployed to Iraq. Before I was deployed to Iraq, I didn't really get Under Armour. You know, they had these shirts that you would wear that would prevent you from sweating or cool you down, but they were like 40 or 50 bucks a shirt. And that just didn't really make good financial sense to me. You see what I did there? Good financial sense. This is the name of the blog. All right, glad you caught that. But as I was deployed to Iraq and I'm in 130-degree weather, sweating my butt off, guess what I wore underneath my uniform? Under Armour. And not just me, but almost every single American soldier that was deployed was wearing Under Armour. So when their stock was coming out, I wanted to get in as much as I could. Now, I didn't have $10,000 cash to invest at the time, but I put in as much money as I could. If I recall correctly, it was somewhere between $4,000 to $6,000, maybe even $8,000 I bought of Under Armour stock. Now, the cool thing was that I made some money on that. I bought it, I sold it, I bought it and sold it. Should have just kept it for the long term, but I thought I was a trader. I'm not. Either way, I still made money. With that story, I want to share a core reason of why you would want to buy a stock. Because you believe in it, because it's a product that you use and you see others that are using it and raving about it. I have a firm belief if you're going to buy an individual stock, you better use the company's product or service or whatever it is. If you don't know anything about that company, then do not invest into it, especially $10,000. Now, if you had $10,000, would I let you or encourage you to invest all of that into one stock? Absolutely not. Do not do that. Just like we talked about with the mutual funds and the ETFs earlier, I would have you diversify that. Maybe into 2 stocks, 3 stocks, 5 stocks. You don't want to get too many. Once again, that's just something more that you have to manage, but we don't want to put all that into one stock. Okay, so this isn't really investing per se, but something that you could put your money into and buy individual stocks or mutual funds or ETFs is a Roth IRA. Now, if you had $10,000 to invest and you hadn't opened up a Roth IRA yet, you could do so. Now, you could only put $5,000 in for yourself, but then if you had a spouse, they could put $5,000 in for them. So now you've got $10,000 invested into a tax-free vehicle. If you don't know much about the Roth IRA, check out my other video where I talk about how to become a Roth IRA millionaire. I promise you will not be disappointed. All right, the stock market is not your thing and you want to look at different options, different alternatives. Here's some others that you can consider. Now, I've talked about peer-to-peer lending in the past, and companies like Prosper, Lending Club are some of the more prominent peer-to-peer lenders that you're going to see that you can invest into. Now, one of the downsides of peer-to-peer lending with Prosper Lending Club is that they're not available in all US states, and if you are watching this and you're overseas, sorry, you cannot participate. But basically what peer-to-peer lending is that instead of going to a bank to get a loan, you could go to one of these companies, apply for a loan, and instead of the bank giving you the money, your peers are going to give you micro loans, usually anywhere from $25 to $100 for whatever you might need that loan for. So whether you're trying to get a loan to pay off some credit cards, maybe start a business or whatever project that may be, that's where this would come into play. Now, how do you make money as an investor? So as an investor myself, I'm going to fund my Lending Club account. I'm going to put my money in there, and then I'm going to choose different notes that are going to pay me an interest. Now, I'm not going to loan one person $10,000. That would be crazy. I wouldn't even loan my mom $10,000. Love you, Mom. And I'm sure as hell not going to loan some money to a stranger, especially $10,000. But that's what I like about peer-to-peer lending is that I'm only going to give one person maybe $25, $50 at most. And if they default, it's not going to crush me as if I gave all my money to one person and they decided not to pay me back. There are definitely some risk with peer-to-peer lending. You know, if they do default, like you do not get your money back. If Lending Club or Prosper were to go out of business, you do not get your money back. So this is not a safe option. Do not think of this like a CD or a secured bond. With that though, you should get higher interest rates that you're getting in your bonds right now, especially with CDs with low interest rates. So if this is something that you want to look at, you can check out some blog posts where I talk about Lending Club and I also share some of the returns that I've made. All right, if you do not want to do the stock market or peer-to-peer lending, there are other options. Another popular option is real estate. Now, I am not a real estate investor. I tried real estate investing years ago and failed miserably. Thankfully, I didn't lose my butt. I did learn a valuable lesson, and the valuable lesson I learned is that I'm not a real estate investor. But the cool thing is, like, there are ways to invest into real estate without actually having to buy real property. And if you got $10,000, that's a great way to get started. One of the safest ways that you can invest into real estate and not have to manage properties is buying ETFs or mutual funds that invest into real estate. A few examples are the Vanguard Real Estate Fund, simple as VNQ, or the iShares Real Estate Trust, IYR. With these, you're getting exposure to the real estate index, so you're going to see some returns. Not like if you're managing your own property or have the risk of buying a property, but still you can look at the 10-year returns on the Vanguard Real Estate Fund, and it's averaged just over 7.3%. Other options are buying real estate investment trusts. Now, you can buy these on the open market, and typically, like the mutual funds, like the ETFs that we talked about previously, it's going to pay you somewhere in that 6 to 8% range. There are some that can pay more, but just realize if you're getting a higher return, then chances are you're taking higher risk. So if you're making double-digit return on a real estate investment trust, then chances are it might be risky. Just make sure you understand what you're getting yourself into. The ones that you want to avoid, though, are the non-traded REITs. The non-traded real estate investment trusts. Typically, these are sold by some shady brokers that just want to earn a big fat commission on these. Now, the danger in these is that you buy it. Now, when you buy these, you don't see the commission come out up front, but I promise you, the commission is there, and it's pretty hefty. Sometimes they range anywhere from 5% on up to 8%, depending on the issuer and all that nonsense. But if you're buying a non-traded REIT and you don't think that the advisor's getting paid on it, then what? No, do not believe that. He's making some money, I promise you. But what really sucks with these is that when you want to get rid of it or you want to sell it and you find out, crap, there isn't a secondary market that I can unload this on, now you're stuck with this thing that might not be paying as high a dividend as when you first bought it, or it became illiquid and you can't sell until it comes due, and that could come due anywhere from 7 years, 10 years, or 15 years, depending on what the terms are. That's why it's so important to read the fine print, or even better yet, don't even bother with them. Another option that I've became really high on, and I just opened my first account a few weeks ago, is with companies like Fundrise or Realty Shares. So we talked a little bit about peer-to-peer lending and how you're giving microloans. Well, this is kind of like that, or kind of like a mutual fund, where you're not actually managing the properties. You are opening the account, funding it with your own money, and then Fundrise or Realty Shares is going to go out and find these commercial properties for you, manage it, collect the rent, and then you're going to get paid on whatever that money is. Now, on their website, they'll share with some of the returns that they make, and it's pretty decent. Now, like I said, I've not had my account open long enough to see what those returns are, but they do have to report all this to the SEC and all that good stuff. So if you go to the website, you'll see those returns. Now, the differences between the two, the big differences that I see is with Fundrise, you can get started with as low as $1,000. And I think they actually might have decreased that to $500. So if you want to get involved into investing into commercial real estate for as little as $500 or $1,000, like, that's pretty legit. With Realty Shares, they want you to do a little bit more. It's $5,000 to get started. But if you've got $10,000, then $5,000 ain't nothing on you. Now, between the three that I've shared, I kind of lean towards either Fundrise or Realty Share, just because it's a new concept. I love technology. I love fintech. So to see what these guys are trying to do and get investors like myself that really don't have the experience or know-how to invest into commercial real estate, but they're going to do that for you, and they have an amazing track record to back that up, then I'm kind of all about it. Now, by far the riskiest way that you can buy real estate is doing it on your own. Now, I'm not the guy that you need to talk to if you want to go out and buy some real estate, flip some houses, buy wholesale, do all that stuff. But what I can tell you that if you don't have the know-how, the experience to go out and buy real estate on your own, you don't have to. There are other real estate investors that will take your money. Yes, they'll take your money in a good way and then they'll go out and buy properties, flip houses on your behalf. Now, this is something that I haven't done personally, but it's something that I'm looking into. And what I'm looking into is I have a friend, like this is what he does. He specializes in flipping homes. So what he's looking for is investors that are willing to give him the seed capital to buy houses, properties that he might not have the cash initially on hand to do it. And then we'll be able to benefit either on the return we'll get from the rent, or if we can sell and flip this house in a very short amount of time and make a fat profit. Now, this probably will not happen in your first real estate investment. This does take a little bit of time. You've got to build your network. You got to make connections and just find out, who's the who's who in real estate investing in your area. Now, I probably should have included this option in the beginning of talking about buying real estate because this is the safest option unless you just hire a really bad contractor or you try to do your work yourself and you have no experience doing home remodeling. But a safer option in investing into real estate is putting the $10,000 back into your own home. Now, this might not make sense if you don't plan on selling your home anytime soon, but any home improvements that could add value to your home could be a good return on your money. Now, with our house in Illinois that we had to sell, like it was a newer house. We only owned the house for about 5 years, but there were still some things that needed to be done. We had to real seal our driveway. We had to paint some of our trim and just make sure that some of the scratches and the holes from our kids were all taken care of. There was some landscaping that needed to be taken care of outside, and some of the house, the outdoor stucco or drive-it needed to be improved. So this was money that I didn't really want to spend. I really had to look at it as an investment, especially that's what my realtor convinced me to think of it as. But I don't think that if we invested the money that we did, I don't think we would have got the offer that we did, and I especially don't think we would have got it in the timely fashion that we did. So that definitely had a good return on the investment by putting back into our home to help us sell it faster. Another investment option that you can use with $10,000, and this is probably the most boring one that I'm going to share. If you are in the 25 to 34 age demographic, then just skip to the next one because this does not apply to you. But another option that you can invest your money into is an annuity. Now, if you know anything about Jeff Rose, you'll know that I absolutely hate annuities, specifically variable annuities. And you can watch another YouTube video where I talk about how much I hate variable annuities. Now, let me take a step back. I don't hate all annuities. There are some annuities that could make sense depending on what you're trying to achieve. Now, the few annuities that people like that I think could make sense are fixed annuities or fixed index annuities. There are also immediate annuities and some others that you can get out there, but let's just focus on those two right now. Now, with fixed annuities, those work just kind of like a CD that's going to pay you a fixed interest rate. It's going to probably pay you more than a CD is right now. Now, keep in mind, CDs don't pay squat. So when CDs are paying squat, fixed annuities are paying just a hair above squat. So don't get too excited. Now, if you just want something safe and make more money than you would make on a CD, then that's where a fixed annuity would make sense. With a fixed index annuity, there are some that have cool investment options that have had some solid returns. I don't really like buying a fixed index annuity just for the investment option because you know what? I don't want to be stuck in this contract that these annuities have. So if I'm going to buy something for an investment, that's going to be a stock, mutual fund, or an ETF. Now, with a fixed index annuity, the only reason I would consider buying one is if I'm going to buy this and I'm going to take advantage of the retirement benefit that's going to accrue if we sit on this money for quite some time. Now, I could do an entire video on fixed index annuities talking about how they work, and I don't want to waste too much time on that. But just know this, if you have, say, 5 or 10 years out before you want to retire, and you want to have a guaranteed income stream, that's where a fixed index annuity could make sense depending on all your assets, the income goals that you have, when you plan on retiring, and all that good stuff. So just keep that in mind if you are, like I said, 5 to 10 years out from retirement and want something that's safer, that's going to give you some sort of guaranteed income stream down the road. Okay, now we're gonna get down to business, and why I'm saying that more than halfway through this video, it's not that I haven't already got down to business, so we're gonna talk about investing into a business. In another video, I shared some of the crucial lessons I learned starting a business, and starting a business is not for everyone. I mean, you have to have some cojones, you gotta have some experience, you gotta know what you're doing. Not just to start a business, but to survive the business that you started. Anybody can start a business. It's easy to start a business. It's not easy to sustain that business and to keep it going. A few examples though of starting a business, I can talk about myself a little bit where, had to get my office furniture, had to get my computer, had to pay the LLC filing fees and all that stuff, had to get our internet set up at our office, get phone systems, fax. There's a lot that can be involved, especially for a service-based business. So another example is a good friend of mine when he wanted to start his photography business. Initially he was just doing it on the side. He had a decent camera, but when he wanted to go official and start actually making some decent money, he had to invest into equipment, new cameras, new lenses, lighting boxes, and then he had to invest into backdrops, editing software, had to work on marketing. This is before social media is what it is. So he had to think of different traditional ways to market himself. So there was marketing dollars and brochures and flyers and postage and everything like that. So there are so many different things that you could invest into if you want to start a business. One of the things I would tell you though is that before you start a business, one of the things I think everybody should consider before starting a business is that you want to have a paying client or a paying customer. What you don't want to have is just a business idea. You want to be able to validate that business. Now, is one client or one customer going to do that? No, but I can't tell you how many times I've talked to people that want to start a business and they don't even have one paying client. So if you have a business idea, validate that by seeing if somebody's willing to pay for whatever it is that you're offering. If you can't find anybody, then don't invest any more money into starting this business. Another option you have in starting a business that's going to give you more of a framework or a blueprint to get that business going is starting a franchise. Now with a franchise, I've seen franchise fees anywhere from $5,000 on up to $100,000, depending on what the franchise is. They're also going to want to see your financials and know everything about you. Now, if you start a franchise, like this is your life. You're gonna be there all day long, 24/7, 365 days a week, maybe not that much, but you're gonna be there a lot. A friend of mine and his brother started a franchise. They started with the Little Caesars chain and they opened one Little Caesars restaurant, which led to another Little Caesars restaurant, which led to 3, 4, 5 more Little Caesars restaurants.
So you took Little Caesars Extra Most Bestest pizza that has the most cheese and pepperoni at the nation's best price and then stuffed more cheese into the crust?
Yep, it's got 3 feet of cheese stuffed in the crust.
And they were super successful with that. But they didn't stop there. Then they started looking at Sport Clips franchises. And I don't know where they are right now, but the last time that I heard, they had opened anywhere between 25 to 35 Sport Clips locations all across the Midwest. And they are making bank. But once again, you gotta start with that one. What's that one idea? What's that one franchise that you're going to pour your blood, your heart, your soul into to make it profitable? So a lot of the investments I've shared up to this point are more tangible. I mean, they're things that you can own or you can get a statement to see what those values are. Now with this next investment, this is harder for a lot of people to swallow, to comprehend, and it was for me for a long time, and I've talked about this before, but taking this $10,000, and maybe not all of it into one thing, but hiring a high-level coach or joining a paid mastermind group that's going to allow you to grow in whatever field or industry or niche that you're in. One of my first experiences with this was Strategic Coach. Strategic Coach is a coaching program for business owners, for entrepreneurs, and I want to say at the beginning it cost me about $7,000 to get started. It might have been $8,000. It was a lot of money at the time, but I was at a point in my business where I needed something. I didn't know what I needed. I knew I needed something I needed to push, and that's when I joined this coaching program. Now, before I joined this coaching program, I did seek some mentorship to see, how did they grow? How did they obtain the success that they had? And what I learned is that a lot of these successful entrepreneurs, financial advisors, business owners that I had in my network, almost every single one of them had had a coach in one way or another. And when I learned that, it was a no-brainer to join this coaching program to see what it was all about. Now, since then, I was in that program for 5 years. From there, I went to the Michael Hyatt Inner Circle, which is no longer around, but one of the best mastermind groups that I was in. That was $25,000, which blows my mind. But I had some of the most amazing growth, not just in my business, but in my personal life by being around the guys that were in this group. And there are coaching programs for whatever you're trying to accomplish, or maybe it's a high-level course or a paid mastermind group. Another good friend of mine, John Corcoran from Smart Business Resolution, has a program called Rise 25. And with this program, he's trying to help entrepreneurs, business owners grow from 6-figure businesses to 7- and 8-figure businesses. And with his program, he brings in what he calls Sherpas. And with these Sherpas, these are people that have made 7, 8 figures, building some massive businesses. And they're there to mentor those that are still in that 6-figure, low 6-figure, high 6-figure business, trying to get to the next level. So just imagine if you could be around somebody that has accomplished what you want to accomplish. How amazing would it be to sit across the table from a Warren Buffett or a Mark Zuckerberg, people that have just dominated in their space and are just worth billions. What would that be worth it to you? So would you take part of this $10,000 and would you invest that to be around somebody that has accomplished the success that you want? Like I said, this is a harder concept for many to swallow and to understand, but having been on where you're at right now and knowing where I am now, like it's a no-brainer. Like if I had a chance to be around some of these top influential entrepreneurs that have mastered what I'm still working towards, that I still have years of experience to get before I get to that point, like that's just the fast track to reduce the headaches, just the struggles that I would have, because they've already gone through it and they can prevent me from going down the same thing. So yes, I would definitely consider taking some of this $10,000, investing in some sort of coaching program, paid mastermind group, something that's going to help with my personal development to help me accomplish those goals that I want to do to help me crush life. Crush it, crush it, crush it, crush it. All right, the last investment option, and what would an investment video be, especially in this day and age, without talking about cryptocurrency, Bitcoin. All right, I got it. Okay, so up until this point, I had not invested anything into cryptocurrency, Bitcoin, nothing. Well, let me say, I finally opened my first Coinbase account. So I funded it and I bought me some Bitcoin. I did. I gave in. What can I say? Now, did I buy a Bitcoin? No, I bought a fractional share of a Bitcoin. I bought $1,000 worth of Bitcoin, which equals about 0.16 shares of a Bitcoin. I did it just because, well, it was $1,000 and why not? Plus I want to see, what happens if I do buy it. I don't want to miss out on the train completely, but I definitely don't feel I'm going to be taking $10,000 and buying into Bitcoin. It's so funny because there were so many people when it was 8,000 and got up to 19,000 that think, oh, you missed out. Like people were buying it like crazy at 19,000. How many people lost their butt? I bet a lot. Now, does that mean that cryptocurrency, Bitcoin is a bad investment? No, I'm not saying that, but you can definitely tell with all the different things going on, the Ponzi scheme that happened with BitConnect and all these trade delays and different countries saying that they're not going to honor these different cryptocurrencies or Bitcoin. There's still a lot to figure out what's going to be left when the dust settles. So yeah, could you be an early adopter and take advantage of cryptocurrency and Bitcoin? I don't mind taking some of the money, but do not take all of this $10,000 and go drop it and buy a Bitcoin. You're probably going to be disappointed and hate yourself later. And I don't want you to hate yourself. I like you. You're a good person. All right, that's it. That is my different investment options, strategies with investing $10,000. Obviously, it's going to depend on where you're at in your life. What are your financial goals? What other assets that you have? Do you have a freedom fund? Do you have a ton of debt? Do you even want to start a business? Do you think that Bitcoin is the next greatest thing? Wherever you're at in your life, there are different options. Just make sure that you do your research, don't get too crazy, and do not buy on FOMO. If you're older and watch this, that stands for fear of missing out. Yeah, I didn't know that either until a few years ago. The worst thing that you can do is buy any investment on emotion. If you're gonna buy it on emotion, chances are you're going to hate yourself. I already talked about this. You're just not gonna like yourself later, so don't do that. Take a breath, chill out, do your research, and make sure that you invest with a level head on your shoulders. All right, so if you like this video, if you found this video helpful, you know what to do. Give me some likes, and there's this thing where they say smash that subscribe button, so just smash it. But if you're watching this on your phone, like don't smash your phone because that's a lot of money to replace and we don't want to do that. All right, so this is Jeff Rose from Good Financial Sense, and just reminding you that, you know what, just invest, invest in your money and do something. Like stop watching YouTube videos and not taking action because that means nothing. Take action now. Go do it. Oh, whoops. Look. International exposure. Boop, boop, boop. No, that's not it. I'm mumbling. Ooh. Oh, yeah. Mm-hmm.